Okay, the way we'll run this is we'll have people come up and ask questions at the mic, and we'll have each of the panelists answer the question. So,
David Sullivan from Myers Norris Penny. You touched on risk management briefly. With each of your farms in different stages of your careers, do you think the risk management tools, be it crop insurance, hail insurance, agri-stability, agri-invest, anything else that you're using, are adequate for the farms? If not, why not? And if you would like to see something different, what would it encompass? What would it be?
Well, I think if it'd be easier to answer that question if I had a crop failure, I'd know right away. I think they're pretty good. I mean, David, for your, my farm probably better than I know it myself for my risk management stuff. But I think crop insurance on the youth advisory committee, that's one of our biggest concerns of the advisory committee, was trying to change crop insurance to suit it better to young farmers and maybe protect ourselves better. Some of our guarantees on our crops are pretty poor. Nobody grows 20 or 25 bushel an acre canola anymore. That's what we're guaranteed. We're looking towards some kind of price protection where I can lock in, if I could lock in $12 canola and at least get that whole 25 bushels an acre at $12, that's guaranteed. There's certain aspects of that. As for agri-stability and those type of things, I guess you hope you never have to use them, so until that actually comes, you're not completely confident in the deal, but you hope when you need it that it's going to be there and that'll be sufficient.
I farm land that is assessed anywhere from $20,000 a quarter to $72,000, something like that. Anyway, I think that what I'm trying to say is that if you're farming land that's really low assessed, your crop insurance guarantee is really, really poor. And so anyway, I gave up on crop insurance a long time ago, and I haven't really looked at it. It might be that there's some changes that I might be able to use it again, but it really has not been a good tool on my farm. I get them mixed up. Agri-invest, they kind of copied NISA, but didn't. It actually works as a good tool. I mean, invest in agri-invest. Because of the return that they give you, well, invest and turn around and take your money back out and put it to work in whatever method you want to make it work. It's a good program that way, but not to leave the money there, that's for darn sure. Agri-stability worked extremely well for me in its old form. And I can't remember what it was called before agri-stability. Maybe someone remembers what it... Okay, I'm sorry, yes. CASE worked very well for me. Because I'm not a mixed farmer. Mixed farmers, CASE and agri-stability, both are going to be just a disaster because when one's good, the other one's bad, you wind up like this and you never get paid. Once again, though, because I farm some land that Mr. Templeton thinks should be in trees. Yeah, well, unfortunately, Lauren, sometimes I've got to agree with you. But anyway, because I farm some poor land, of course, in a drought year, you're hit doubly hard. CASE worked extremely well for me. Agri-stability, not so much. If you're familiar with the changes, well, I mean, your top 15% is gone from CASE in agri-stability. So I kind of think it's funny that Agri-Minister Ritz can talk about how he made things better because, in that sense, at least, it's a much poorer program for me. Daryl was talking about the guarantees or what he would like to see as far as a yield guarantee with a price guarantee, and I think some of you would know a lot better than me, but some of that's being done in Alberta on a provincial level, I think. And, yeah, I mean, if they would come up with a program like that, man, we'd be in heaven. There's no two ways about it.
I'm going to talk about a few other things. Okay? One, in your risk management tools, crop insurance, CASE, agri-stability, the way I look at it is, can you afford to farm next year if you don't have those tools within your portfolio? Simple. And the answer is either yes or no. Okay? If it's no, then it's part of the cost of doing business. And that's how you have to treat it. Doubly in that effect is that your crop rotation is part of your risk management tool. Because agriculture is highly capitalized. You put all your money out there, whether it's invested in land or equipment or both, you need a lot of cash flow in order to keep all that in, right? So the other thing is don't get overextended. So you have to watch your debt, liability, and debt. You really have to start watching your asset mix. You have to watch your current assets, current liabilities. All those are key performance areas in agriculture. It gets back to rate of returns. In order to identify your risk management tools and whether or not you're becoming overextended. Are you in an interest-only repayment term? Okay, because if you are today and that's all you're doing, you're going to be broke tomorrow because of the fact you haven't built, you're relying on capital appreciation to have your equity increase. You're not relying on any debt reduction. So that you need to have that debt reduction. Agriculture refinances every 10 years, and that's the basis that you should be looking at. Is on a 10-year basis, over the last 30, 40 years, you've refinanced your operation. If you can hold that over into 14 or 15 years, you're doing really well. Okay, and you've been able to put money aside. So those are the things that you have to look at. Not only the crop insurance and the agri-invest and agri-stability, but all those other key financial tools that are available to watch that you don't get overextended, because that's how you go broke, is being overextended. Not from not growing a crop or being frozen or being hailed on, because you have tools to basically cover your operating costs. It's all the rest of it goes into play.